Hi, Magnus. Thanks for being here with Bloomberg Adria today.
Thank you so much for having me.
What would you say is the biggest hit right now in the blockchain market and the ecosystem?
I would say that the biggest thing that's happened recently is honestly just the stablecoin movement. So I think the initial use case for blockchain was around Bitcoin, and that had a lot of success in its early market for anonymized payments. However, that shifted a lot recently to be much more stablecoin focused and much more about real-time payments between users, especially in regions that don't have stable currencies.
How would you describe the Croatian fintech markets and the stablecoin markets? And we have the digital euro evolving now as we speak. How would you describe it?
Yeah, well, first of all, I just want to say congratulations on the full membership to the EU. I think that's extremely exciting. And I think what that brings is a massive new opportunity to start incorporating stablecoins into the broader economy within Croatia. We heard today from a number of representatives from central banks, including the central bank from Croatia, also the central bank of Europe in general, of how well that could be implemented in Croatia, in particular because it's a nation that's built on cash, right? We heard that over 50% of payments in Croatia are based on cash. And how impactful would it be to be able to move a lot of that transaction volume into something that people trust, that they can have access to and know that they have ownership over?
So from the representative of the European Central Bank, we've heard that digital euro installment is like 3 or maybe 4 years away. From a market point of perspective, how do you see it coming?
I mean, I know that these things are tough to get out of the door. I know that there's a lot of regulatory challenges. I think at the end of the day, governments will look at what other governments are doing. And so where we operate is we are working with the nations that are the most forward thinking about these things, making sure that we can get pilots off the ground so that humans, real people see the tangible benefits of having stable coins or having digital currencies in their wallet. Right? I think that's going to be one of the best ways to accelerate Croatia's efforts and to give them a playbook of how they can do this safely to make sure that people are protected, people have a safety when they're holding their assets, and that it's simple and free to transact.
But is there some kind of a tangible advantage for an ordinary guy, an average Joe, in using digital euro versus his classic credit card or plastic or tire banks?
I think there are huge advantages. So one thing to realize is that currencies are issued by the central bank, but then eventually when we interact with them, it's through a massive private enterprise, right? It's layers and layers and layers of companies like MasterCard, Visa, Revolut, whoever else that moderates our interaction with the currency. But at the end of the day, it is humans who actually transact between each other. And the question is, do they need all of those middle players? Right? Or if they do need those middle players, how can they do it in a way that doesn't take value off of the table for the merchants and for the people who are paying for things, who really are the ones that need the help?
Different fees? You're here.
Different fees. Exactly. So, every time there is an Amex transaction, for example, that's 3 to 5% from a merchant, right? That's a huge level of margin that if we could find a way with digital currencies to give merchants back more money and to get people more value for their dollar or their euro, that would be massive.
Where do you see the biggest challenges in implementing? I mean, 3 or 4 years is a short time before this kind of thing. Where do you see the challenges?
I see the challenges in trust. So really getting individual users to trust that the currency that they're given in the form of a digital currency is as good as cash, right? Once we get people to truly believe that, then I think we can fully modernize our financial system now, right? And the truth is, it took a long time for credit cards to get out there, right? A lot of people didn't trust credit cards. They didn't want to put their credit card information on the internet. And so we're just seeing the very beginning of what a better financial system could look like, fully modernized by stablecoins and fully modernized by CBDCs.
Croatia will need, I would say, a strong incentive in it on think that, because there are still significant number of people who are still a bit pessimistic, judgy, suspective maybe of using plastic, as you say, put off their personal data of cards on the internet. How would the ideal campaign for digital euro need to look like? Is it like use this and you will see on additional fees or something else?
So currency is a two-sided market, right? There are people who accept currency and people who pay in currency. And this interaction is repeated across so many different places. It's repeated when you buy a sandwich or a beer from a grocer. It's repeated when you pay your taxes with the government. And I think the main thing that's important is we do have to create incentives for both sides. Okay. On the merchant side, it's very clear to understand what that is. They will be saving money and they won't have to pay credit card fees, right? Because it comes out of the merchant at the end of the day. For the user, I think we can be a lot more creative with how we help individuals who hold our currencies build wealth. And what I mean by that is in the stablecoin movement, if you hold the stablecoin, you can earn 5, 6, 7% yield, right? On that stablecoin just by having it sit in your bank account. What if we could make a digital currency, which we have the technology to do now, where just by holding the currency, you're also generating yield to keep up with inflation and beyond, right? I'm interested in how we can have everyday people enjoy and the wealth creation effects of digitized currency.
But there is the issue in povertyism, I would say, of the privacy issue. Right? Some people just don't want the government, the public, the regulator to know where are they spending their money, right? What about that?
Well, I have unfortunate news for most of us, which is they already know we're spending our money. And the truth is, when all of your payments go through these private networks, those are all being able to be backdoored by the government anyway, right? And so...
Are you talking about cash payments?
Well, yeah, cash payments...
popular.
Right. Cash payments you can get a little bit under the let's say, radar when it comes to governments. I think the biggest question is, one, why are people doing that? What is the reason why people want to hide their payment transactions? Is it fraud or is it tax avoidance or something else? And if it's really for the good reason of they want to just have privacy over their transactions, that is something we can build. We can build private technology like two-sided encryption or threshold encrypted environments or, there's ZK technology. There's so many ways we can build true verifiable privacy into these digital payments.
Right. Where does Cosmos Labs fit into all this?
So Cosmos builds the largest network of blockchains in the world with over 200 independent blockchains, over $70 billion of value secured on top of our technology. We help companies, people, startups, everyone rebuild their back-end systems on a new kind of financial rail, right? And that is the Cosmos blockchain technology. And so we work with major Fortune 500 companies, banks, central governments to help them completely reform how they think about money and how they manage transactions and interactions with users.
And the digital landscape and the stablecoin landscape, blockchain technology altogether, how is this part of cybersecurity today looking? Are they rising concerns or are they decreasing a lot?
Cybersecurity in general is a massive concern across the world, right? And I think one thing that we've learned is that legacy systems, right, those that are run by these older banks or those that are run by insurance companies are the first to get hacked, right? And then when they get hacked, all of that information gets leaked into the dark web and then can be resold and used to create new credit card numbers, identity theft, etc. What blockchain seeks to do is to give you what we call self-custody, right? Self-custody basically means you own your information. You own all of your money, your assets, your information, and no one can take that away from you. Not even if you're responsible. And you are also responsible for that information. But what we find is that good security operations oftentimes can be localized to the individual, right? And it makes it much harder at scale to hack those systems because they have to hack each individual person. Instead, they go after a giant company with 500,000 credit card numbers where it's just one password, you get it, right? And so what we believe is that by giving back control to individuals by using blockchain technology, they can have better ownership over their personal information and also over their assets.
And you don't see a rising concern in that direction?
Well, here's the thing, right? There have been some issues in blockchain in the past. FTX, BlockFi, Celsius, none of those were actual blockchains. Those were exchanges. Those were centralized systems. They looked a lot more like the companies that were getting hacked today. True blockchains like Bitcoin, like Ethereum, they don't get hacked. right? There haven't been massive hacks that have drained all of the funds out of those protocols. And so what we believe is the technology itself sometimes gets a bad reputation because it's associated with things that we're not building on the technology. But the technology itself is safe and it's mathematical and it's verified.
Okay, so in Europe, we are seeing the shaping environment for putting out the digital bill as a euro-solid stablecoin. In the United States of America, we see a different approach. The current legislation and regulation is pushing towards different companies being able to hold their own national stablecoins. Some people would argue that it's turning out as a becoming or shaping a future crisis. Would you concur with that or not?
I think regulation is good in this industry because we've already suffered the effects of what it looks like to have unregulated stablecoins. I came into the blockchain space in May 2022, right as the Terra collapse wiped out so many individual savings and so much assets belonging to just normal humans. And so I really strongly believe that good legislation coming out of the US via MiCA in the EU, via some other things that are coming out of Japan and Korea, this gives us an ability to trust these stablecoins. However, trust is not enough, right? Having good legislation doesn't prevent the issues from happening in the first place. And so what I truly believe is that we need to create systems for the governments to directly issue these currencies without relying on more third parties and private sector vendors to custody those assets and then also to create the link. Because we know what happens when that link breaks. We saw it with USDC. We saw it with USDE just recently last week. And as soon as people start to see those assets trade at less than one of the underlying currency, all faith goes away. Governments need to step in and they need to take control of the thing that they're responsible for.
What about Bitcoin?
What about Bitcoin?
Well, in the upcoming years or months, I mean, when we take a look at the current value, which is around $100,000, right? A couple of years ago, nobody could even imagine that it's going to be worth as 100,000. Now, people are saying maybe a year or two, it's going to be worth 200,000, especially given the fact that the current administration in the US and Donald Trump are pretty keen to digital coins, stable coins, especially Bitcoins. What's your take on its value in the upcoming year?
I love Bitcoin. I'm a huge Bitcoin fan. It was the first currency that I got excited about because it was the first currency in blockchain. I think what's really interesting and what's really essential is that many different big governments, officials, major companies are embracing Bitcoin, which to me is just the beginning of embracing the more important thing, which is the underlying blockchain technology, right? That is the technology that has the potential to completely reshape the financial world that we live in. And that's what we believe. And so we oftentimes can easier access and talk much more smoothly with people who understand Bitcoin because then they understand what the technology underneath it enables.
So what, you're talking about maybe the US government issuing bonds, treasuries, in digital assets, coins, right?
Yes.
In Bitcoin maybe?
Exactly. This is the future. We will have digital versions of everything that right now operates behind closed doors. This is what I believe that we're heading to, and I think this is going to happen over the next 10 to 20 years.
Okay,
right.
So that's my next question, actually. How will you see the digital payments environment generally shaping in the next decade, in the next 10 to 30 years? Like, how many cash will we have when compared to digital payments, when compared to blockchain technology, etc.?
Well, I think the core thing is cash is paper, right? The paper that you hold in your hands isn't worth anything. The only reason it's worth something is because the government and everyone around you believes it's worth something. The only benefit of cash is that you can hold it and you can touch it, right? You know that no one else has that dollar when it's in your hands. The incredible thing that we've invented as humankind is an equivalent digital technology that has that same property, where you have it, on the blockchain. No one can take that away from you. It's impossible to take it away from you unless they hack your account, right? Just like unless somebody breaks into your house and steals all the cash on your
How probable is that? That's if somebody hacks your account. If you're one responsible, no intermediary, no bank cover your losses. If somebody hacks them, right? Is that a huge responsibility? Is that a big risk?
It's the same responsibility as locking your house at night, right? You have to keep your own assets secure. However, as a person myself, I trust myself to keep my assets secure. I don't necessarily trust other people to keep my assets secure when it's not their money, it's mine, right? And so what we really believe is that as people realize this and as people start to trust it, they will realize that they can have more control over their assets in a digital way versus having to hold cash. I think cash will go away for the next 50 years.
50 years. Okay. So how would you persuade somebody who is totally anti-digital in this moment to step into the market, to open themselves up for blockchain, etc., etc.? How would you respond?
I would give them the carrot and the stick, right? That's a saying in from my country. So the carrot is the thing that draws you towards the digital currency. In this case, you can make so much more money on average holding digital currencies because you can begin to earn yield on those assets versus the cash that you put under your blanket. That is just going down by some percent every year. It's like it's chipping away. That's not true if you have a digital currency that is incorporated into, let's say, the underlying treasuries of that currency. So that's the first thing, right? Making sure that they understand that they can get access to wealth creation. On the stick side, which is the thing that makes people leave a certain system, cash is only as valuable, as I was saying, as the people around you believe it is. And oftentimes we've seen historically, governments will sometimes invalidate entire categories of cash at once to basically pursue their agenda. So, right, this happened in India where they invalidated a certain kind of banknote because they thought that everyone who had that banknote was a criminal, right? That's not true. A lot of normal people had those banknotes and suddenly their money was worthless. Yeah. And so don't trust, right? Verify. This is what they say in the industry because we need people to understand that their future is in their hands, that the financial system of the world belongs to them, and that digital technology can give you access to that.
Magnus, thank you so much for sharing all these details and insights with Olgovic.
Thank you for having me.